Hello Crypto Wizards, Sean here, and we are looking at some pretty unprecedented price action movement on Bitcoin at the moment. I mean, we went from like $3,000 mid-September to what, $7,600 on the 5th of November. Now trading at about 7,200. So the price action is absolutely mad at the moment. Now you might be looking to get in on Bitcoin, and what I wanted to talk about is how to significantly reduce your risk in entering a trade and buy yourself time to see what happens with the price whilst owning Bitcoin. Now, normally what you would see happen if you bought Bitcoin, so I'm gonna just go to one of my tools over here. If I buy a Bitcoin right now at today's price, if the price moves down, I lose money. If the price goes up, I make money. Straightforward, right? Well, what if we wanted to protect this downside so that if the price goes down, you only lose a certain amount of money? Think of it like car insurance. You buy insurance for your car and you have an accident and there's like $5,000 worth of repairs to do, but your excess is only $200. Your maximum risk is $200 plus whatever you paid for that insurance. An option is kind of similar, and that's what we want to talk about here, is buying an option to protect your downside. So what is an option? On Investopedia, an option is a financial derivative that represents a contract sold by one party, the option writer, to another party, the option holder. The contract offers the buyer the right, but not the obligation, to buy or sell a security or another financial asset at an agreed upon price, the strike price, during a certain period of time or at a specific date known as the exercise date. Blah, 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 blah. What does that actually mean? So let's say that I give you the right to sell Bitcoin between now and the 24th of December at a certain price. Let's call it $7,500. So the more the price would move down with Bitcoin, the higher the value of that option. Because if I'm allowed to sell at this price and the price is moving down, the value of that contract between us is increasing. And that's exactly what I wanted to talk about over here. So for example, let's say we're not going to buy any coin. Let's say we're going to buy a put option, and we're going to buy it at $7,500. This is how a put option works. Now, a put makes money when the price goes down. If you buy a put, a call option makes money if the price goes up. Now, right now, we're going to look at the price moving down. I know that you're bullish, but we're going to come to that in a second. Let's say the price moves down. The put option, as I was just explaining, makes money. Your profit increases as the price moves down. Let's say the price moves up. Well, your profit decreases. Now, interestingly, you want to hold some coin. And what happens when the price of that coin goes up? As we saw earlier, you make money. So let's enter in two transactions here. The first is we're going to buy this insurance. We're going to buy this put option with a strike price at $7,500 for an agreed date of December the 24th as the expiry date. And let's say now we want to buy some coin. This is what your profit and loss scenario would now look like. And so in this trading tool over here, it allows us to see into the future, essentially, what would our profit be depending on what happens with the price. As you can see here, if the price rockets up, your profit is unlimited. I mean, if Bitcoin goes to $15,000, you're gonna make a ton of money. If it goes to $10,000, you're gonna make $2,500 just owning one Bitcoin. But your loss is capped at $500. Now, that's kind of interesting, because before, when we looked at this, without buying that insurance, your loss was not capped. It could go to zero and you could lose all your money. But now you've bought some insurance. So if we enter into that contract, we have the insurance, and it's a very safe way to enter into owning Bitcoin. So I hope you found that useful. There's going to be a lot more videos on options because nobody is talking about this. Bitcoin is highly volatile and you can make money no matter which way the price moves. I'll give you a quick example of that now. Let's say we don't own any coin. We buy one put and we buy one call, both at the same strike price. You can see that no matter which way the price moves, you make profit, and you lose money if the price doesn't move. Now, the nice thing about this and the nice thing about options is you have time. Even though the option loses value over time, the market changes over time. The Bitcoin price will do different things over time, and it allows you to buy time to let the price do its thing, rather than entering into a trade where you have your resistance line here and your support line here. Next thing you know, the price plummets over there, you've lost money, you've cut out of your stop, you're upset because you didn't have the time, only then to see the next thing happen, the price rockets up, and you're really annoyed. So this is a really good way and a safe way to enter into buying Bitcoin. And we'll talk about in some other videos how you can actually do this. What are the exchanges that allow you to buy options? What's happening with the Chicago Mercantile Exchange? What's happening with the futures market? Why you should care and why you need to get knowledgeable on that. So I hope you found this useful. And if you have any questions, just head over to cryptowizards.net and ping me a message or two, and we can answer any questions you have either online or over video. So thanks a lot for watching, and take care.